What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to take a macro level view at the stock market. We'll look at the S&P 500, NASDAQ 100, the Dow Jones, the Russell 2000, and then we'll also look at Bitcoin. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so we're looking at the S&P 500 SPX index weekly chart. So each candlestick represents one entire week's worth of price action. Now my price target for the year 2021 for the S&P 500 has been up here at 40.40, and I have recently revised that up to about 40.60. Now as you can tell from last week's price action, we did have a very bullish week and we closed well above the 5 EMA. We're still in a very strong bull trend and we're getting very close to my price targets. To 40.40 we're about 0.5% away, and to 40.60 we're about 1% away. So this doesn't mean that the stock market has to stop at these levels. What this means is that we're going to become very defensive at these levels, and we're going to observe the price action very closely once we get to those levels. If we blast right through those levels like they're not even there, that will be a bullish indication that we can go higher for the year 2021. However, if we get to those levels and we start to stall out, we're going to be very defensive of a possible stock market correction. Now, one thing I want to remind you of is the bear bull survey does have a lot of bulls. Remember, this is a contrarian indication and we don't normally want to be bullish when the rest of the retail investors are also bullish. So we can see the recent chop fest has reduced the bulls by about 5%, but we still have a ton of bulls in this market. We only have about 23% bears, and while we still will follow the price action and the trend, this does tell us that we're getting to a euphoric state of a lot of greed. Remember, we want to be fearful when everybody else is greedy, and we want to be greedy when everybody else is fearful. So this indication is telling us to get more defensive the higher the stock market goes. Now, I don't think it's any coincidence that we're seeing a lot of greed as we get close to my price targets. The stock market is very cyclical and it's very good at tricking the majority. The majority of the retail investors lose money in the stock market trying to trade it because they don't know exactly when they should be in or out of this market. So the higher the market goes, it's going to entice more and more retail investors to join into the market, and they're usually going to start buying in near the top. So we follow the price action and the trend, but we also do have price targets that we watch very closely on this channel. So 40.40 and 40.60 are going to be those price targets that I want you to pay very close attention to. Now, I also did make a members only video in the Discord server, and if you're in the Discord and you have not watched that video yet, I really suggest that you watch that video and get caught up on what to expect. Now, I also want to switch this over to a monthly chart and look at this from a monthly level, and we can see that we're getting very far extended. We're way over top of the 5 EMA on this monthly chart, and we are in the month of April now, so we did get an expansion of those Bollinger Bands. We can see the lower Bollinger Band is starting to flatten out, and the upper Bollinger Band is basically going parabolically up. We're also getting very far extended over the 50 EMA on this monthly chart. So as we get into these price targets, it is possible that they could trigger a stock market correction. We do have our support trend lines from the breakout, and those are most likely where we're going to find support in the event that we do get a correction. Now you can see in the monthly chart, the price action and the trend are still very bullish as we continue to head up towards these price targets. Alright, so next up, let's take a look at the NASDAQ 100 NDX index, and again, we're back to the weekly chart. We could see we had a very bullish week and we closed well above the 5 EMA. We're still maintaining the bull trend even though we were in jeopardy of breaking that trend since we had that tech correction during that sector rotation, but the trend actually never went bearish and we maintained a bullish trend. We still found support above that 20 simple moving average, which overall is very bullish, and it tells us that buyers were stepping in and buying up that dip. Now, because of this correction, we did weaken the trend and we do have a lower price target that we have to get through before we can get back up to our previous price target. So if you remember, our price target for 2021 on the NDX is 14,488. So this tech correction did weaken the trend a little bit, and you could see this week we did not get a very large expansion in the Bollinger Bands. So the level that we need to get through in order to get back up to our price target is now 13,717. Watch this level very closely, because if we do hit that level and we start seeing selling, that will be a lower high, and overall that will be a bearish indication in the stock market. So 13,717 is the level we now want to pay attention to. And don't forget that we're still in a bull trend with bullish price action. So overall, we're still bullish on this market, but we just want to be defensive bulls and we want to watch these price targets very closely. From last week's close to that price target, we're about 2.82% away. And with the recent bullish movement in the stock market, we could easily get to that price target in the next couple of days in the next trading session. Now let's switch this over to a monthly chart, and we could see on a monthly chart, we're still getting Bollinger Band expansion. The Bollinger Band expansion is getting very close to our price target, and we could see the month of April has a lot of room to run if we do get a very bullish month. All of the price action and the trend is still very bullish as well, And don't forget, we are still getting very extended over the 50 EMA. So there's a lot of potential downside risk if we do get a correction, but we're still looking up towards higher price targets because we're still in a bull trend with bullish price action. We don't want to get bearish just to be bearish. We're very objective and we're following the price action in the trend. And on the weekly and monthly charts, we can still see bullish trending. Don't forget, this is a macro level view and this is not part of our daily analysis where we look at daily and hourly charts. So according to the monthly chart, it's very possible we get up to that price target, but don't forget, we want to watch that level around 13,700 on the way there. Next up is the Dow Jones Industrial, and we're switching back to the weekly chart. We can see we closed the week above the 5 EMA and we're still in a very strong bull trend. We're trading very close to the upper Bollinger Band on the weekly chart, but these bands will expand next week and allow the Dow Jones to go higher. We're still in a very strong bull trend and the Dow Jones has been looking very strong lately. If we switch this over to a monthly chart, we could see that we're already very close to the upper Bollinger Band, and this is not good news for the Dow Jones because it means there's not a lot of upside movement in the month of April without possibly seeing selling. Remember, if we get too far extended above the upper Bollinger Band, that will bring selling pressure into the Dow. You can see that the 5 EMA on the monthly chart for the Dow is very parabolic and we're trading well above the 50 EMA. So all of these markets are looking very bullish and they're definitely getting very far extended. Eventually they will hit a price target that will trigger a correction and we will see the stock market go through a correction and these prices will come down. However, we're not calling a top. It's just something to be aware of, and we're seeing more and more greed, which means we could be getting closer to that day. Going to the Russell 2000 weekly chart, we can see that the Russell 2000 did close the week above the 5 EMA. We're still maintaining a bull trend, but you can definitely see the Russell has started to lose some of its momentum, and it's really just been going sideways ever since February. We've had down weeks and up weeks, and now we're kind of recovering from another down week, but we're still just hanging around this level right around 2,300. Now this is a sign that the Russell 2000 is losing momentum, and if I switch this over to a monthly chart, you're going to see exactly why we saw that. In the month of March, we were trading way above the upper Bollinger Band, and that is way too far extended, so we saw selling pressure. So we saw the Russell 2000 sort of print a doji candle for the month of March, and that was because the price action was just getting way too far extended over the upper Bollinger Band. But now in the month of April, we get an expansion of those Bollinger Bands, but don't forget about the lower Bollinger Band, which is also expanding to the downside. So there's still a huge risk in the Russell 2000 if it is getting overvalued that it could go through a major correction. We can still see the price action is well above the 5 EMA and all of these moving averages are still stacked to the bull side. Without a doubt, looking at these moving averages on the monthly chart, you can definitely see some parabolic movement. So going back to the weekly chart, there's really no surprise the Russell 2000 is cooling off and trading sideways because it did get way too far extended on that monthly chart. Also, we have not yet tested the support trend line. So if we continue to see a correction in the Russell, we're expecting to see levels of about 2070. So overall, this is an indication that the Russell 2000 is losing upside momentum, but the price action and the trend are still bullish. So that doesn't mean that it can't continue to go higher from here after this consolidation. All right, next up, let's switch over to a Bitcoin weekly chart, and we can see Bitcoin is closing out the weeks above the 5 EMA and still maintaining a bullish trend. We're still struggling to break through and form a higher high on the daily chart, which is right around $59,000. Remember that Bitcoin is already very far extended and it could go into a correction at any of these price targets. So the first price target we want to watch is a break and close over 59,000 because that means we can get back up to about 62,000 or 65,000. However, if we can't break back above that level, we could easily go back to any of these moving averages, and for Bitcoin, that's anywhere between a 20 and 50% correction. Switching Bitcoin over to a monthly chart, you can see exactly why I'm so defensive on Bitcoin. On this monthly chart, we were trading way above the upper Bollinger Band in the month of March, and in the month of April, we've already started out the month way above the Bollinger Band. So there's really not a lot of upside potential for Bitcoin because it's just getting way too far extended. The month of April could just trade sideways while these Bollinger Bands catch up, but you really wouldn't see a lot of upside movement in Bitcoin until the month of May or June. So right now, it's favoring a huge correction in Bitcoin because we're way too far extended, and there's going to be more sellers than buyers when we get into these situations. So from these levels, you could see from Bitcoin's current price back to the 5 EMA is about a 20% drop. If we drop all the way to the 13 EMA, that's about a 47% drop, and back down to the 20 simple moving average is about a 67% drop. So cryptocurrencies can easily go through a flash crash where you could easily see the price drop drastically over the course of very small amounts of time. So I just don't see a lot of upside potential for the huge downside risk in Bitcoin, and you can see that the momentum is starting to stall out and it's just struggling around that $59,000 level. You can see this a lot better on a weekly chart, that it's really just going sideways, and it looks a lot like the Russell 2000, which just went way too far, way too fast, and it needs to cool off. So just remember, there is a lot of greed in the stock market, and you can see that there is a ton of bulls, and we've had a ton of bulls now for a couple of months. So normally speaking, if you're going with the average retail investor, they're usually going to be on the wrong side of the trade. Again, that doesn't mean the stock market can't go higher. It's just something to remember and something to keep in the back of your mind as we continue to go higher. So remember, we're very close to my price targets on the SPX, and this is from a macro level view, which means we could see a long-term stock market correction once we get to one of these levels. So we'll continue to watch the price action very closely once we get there, and we'll continue to monitor this situation. Remember, I do daily stock market analysis, and I keep you up to date with the day-to-day moves in the stock market to help you stay on the right side of the trade. There's also the Stocks Channel Discord where I do intraday updates during the market hours, and I bring you new trade ideas each and every week. If you're interested in joining the Stocks Channel Discord community, you can find out how to join by clicking on the link in the description of the video. So I hope you're all having a great weekend, and I hope you enjoyed this macro level view of the stock market. And as always, I will see you in the next episode.